up here. Trader Joe back on July 1st, 9:53 p.m. Just gonna do a final market analysis and wrap up to the Psychology is Key video. And if you guys like going over some key concepts in trading, like when to trade, when not to trade, what I saw today, it was pretty simple. We saw the NASDAQ here making higher lows. We saw it breaking out right here. So we had this kind of key support between like 940 and 945. So I just threw my limit order in right here. We chopped around, but that's really no concern to me if we're going sideways, or even if we would have dipped below this low. As long as we were above these kind of main structural lows, if the market wanted to just like steal some liquidity before running up, I was fine with adding on this position and then taking a pretty wide risk overall, but then just having a trailing stop, which is the trailing stop must have been able to hang in there until it ran this high up at 20,050, and then finally making this move back down to stop me out somewhere around 05. Unfortunately, I don't think, when I come back the night after the trades, I can't see the fills and orders, but you know, like I said, so I saw this kind of demand zone if you watched the last videos. And part of the key to psychology, guys, is I guess pattern recognition, and look at the markets in a way that nobody else really looks at them. So I got these PSAR dots, whatever, right? You know, but anybody could go to a 1 minute chart and be like, oh, I'll just trade this. This is my back test for this strategy, and 1 minute chart just running, sure, 15,000, right? 6,600 in drawdown, so it takes some heat. And maybe this heat is at night when the markets are chopping around, and maybe it does pretty good during the day. But in this market, look, the 2 minutes is not as good as 15,000, but then you go to a 3 minute and all of a sudden you're making 21,000. Yeah, you take a little more heat. 39%, 1.3 to 1 risk to reward. So you gotta, I guess at the end of the day, guys, you gotta make a decision on how much risk are you willing to take on a trade. Size your risk accordingly. I mean, a strategy like this is a good strategy, right? You see the profits go up and to the right. You get some run up, you get some sideways, more run up, you know, more sideways, whatever. 10-minute chart, been kind of killing it, you know, but look, 150 trades. Now, I don't know, maybe it's executing a lot of those at night. Again, maybe this sideways is some more night trading since we're at almost 10 p.m. at night. But then, you know, this is actually probably on a 10-minute chart. Never mind, this only takes a couple trades per day. So this is actually when markets are just unfavorable versus favorable. And that's what you got to learn to recognize is, are the conditions favorable? Well, what I saw today was we actually had this run below this lows, right? You had these equal lows right here. We had a strong run, and then let's just hide this. Let's move this a little more over. Let's hide this. So on the 10-minute chart, it's not as clear. I mean, I did see one demand wick, but when I looked at the 30-minute, and I see demand wick, demand wick, demand wick, all below these lows. And then you got this 950 level that's kind of holding the market down as resistance, and it found that it was holding, trying to hold it as support over here. And then I saw that we were breaking it. It's not the strongest trade because you're coming out of demand. I really prefer to catch, markets more like what we had on Friday here, where we had the dip down here at a key level, and then we just really rocketed 200 points or whatever. That's that's not realistic. That day like that doesn't happen every day, but today was still a good day. One contract, long at 9:45, made about almost 60 points, like 55 points or 56 points, something like that. But just a trailing stop, simple trailing stop that didn't even get to make it to the high of day. I mean, I always hope that we'll get in a nice grindy trend that'll take me from when I enter to the end of the day, but that usually doesn't work out that way. You always got to factor in risk, and I let a trade currently on my trailing stop trade against me about $900, so I was probably 2,000 in profit. Gave back 900 and then went ahead and just closed it out. Yeah, would it have ran higher if I would have ran it all the way into the close? Sure, it would have ran to 50 basically. Entering it, I would have made 100 points instead of 55 or whatever. But it's, you're not going to win it every day. It's a matter of can you find a setup that works for you, and can you keep it simple? Can you manage risk? The risk was pretty high on this one, like I said. You can see the 30-minute chart takes a lot of heat. So because it, when it catches a breakout, it's going to also put on a lot of risk. So the lower time frames will put on less risk, and they'll follow the trend more quickly, but they can also get chopped around a lot if you're trying to trade it all day, all night. But anyway, that's not really the point. The point is, find a system that has an edge. Just this PSAR alone right here, parabolic SAR strategy right off of TradingView on the NASDAQ 10-minute frame. I mean, almost on any time frame really. 3-minute profitable, 1 minute profitable. So you just have to understand what's the risk of your strategy and what's the likelihood of your trade working out, and then plan accordingly. It's all about planning, guys. So I only trade one lot. Today I really liked how this was moving. I felt like it was like a really good, probably 70-75% likelihood that we trade up, up and to the right today. And that's kind of my strength, is recognizing bullish momentum. I'm not as good at bearish, but when I see bullish action, I'm pretty good at recognizing that. So I recognize that this was bullish action, and so I took the risk, and then I put my stop. I had that add position at 9:10, and then I had a really deep stop, and then I said, yeah, but if it just wants to run, then cool. If it wanted to pull back and then run, I was cool with that too. And that's just kind of how you have to look at this. It's a game that you don't want to blow up at, but you want to be able to take plenty of heat and plenty of hits. So you just size according to how much heat you're willing to take and how many hits you're willing to take. So you know, these trading prop firms are not easy to pass. I'm at, you know, 25, almost 2,600 in profit, and you know, I got like less than 3 weeks to complete it or I'll get charged again. But you can't really look at it that way, because that'll just make you take dumb trades, gamble, and you know, you want to look at trading as not like gambling, but as like you are the casino. And if you find good setups that will pay you in the long run, then you just take those, you collect the money, and then you move on and you look for the next one. So we'll keep watching this. If you guys like these concepts, you know, you have questions, I'll just keep posting my thoughts about how I'm approaching trading, how I'm mitigating risk, how I'm managing my psychology. And the big thing I would say on managing psychology is, like I said, you got to really take into consideration how much heat am I willing to take on this trade that I'm totally okay with, and how many, you know, and if you do take the hit on the stop loss, how many hits am I willing to take, you know, and try not to bust this account. So yeah, we're looking good. I got what, my average winning trade is at 1320. This says I'm winning at about 47%. My average loss is about 445, which puts me at about a 3-to-1. You know, we had the 11:30 today. We had a couple of nice winners on Friday and a small loss. You know, Thursday we had a series of $600 losses. This was me not trading well, guys. But this is actually what inspired me to start making the videos, to really hone in on focusing on good trades with good risk, sticking to these smaller losses, try and keep them more in this $300 to $400 range, and not getting caught up in taking, you know, 5 losses in a row or whatever, like I did on Thursday, all in the same day. It really shouldn't go that way, because I actually had a pretty good read on Thursday action, and I just didn't execute well. So I actually had the read on Thursday that it was also another good buying day. So this is today. 30 is Friday, and then or no, 28 was Friday. Yeah, 28 was Friday, 27 was Thursday. Yeah, I got caught up in this drawdown. You know, basically I saw these pumps, I missed them, I FOMO'd in on this dump and got wrecked. And had I just played it like more calm, cool, and collected, this 7 a.m. dump, take it off, and then ride it into the, you know, ride it back up into profit. Easy, you know. But yeah, I wasn't following my plan that day. So like I said, I'm here to work on my psychology. Hitting this record button actually does help me, you know, feel more accountable and like trading more manageable. So yeah, my overall take on this current market, I mean, when you zoom out on this 1 hour chart, same thing like I saw today. You know, we opened up the new contract month here around 850 or whatever, and you know, we've had some pumps, some dumps, but I mean, this is a range. We're stuck. You know, 20,300. We had this equal high, you had this overnight kind of pump or whatever. Yep, because that's 8 p.m. to midnight, and then dumps back in all the way back to these lows. Made some new lows, which the market might want to take these lows at some point. We are in a lower high trajectory. We're also in a higher low trajectory with this double bottom. So we're really right in the middle. I mean, this is the true definition of contraction. But we're going into summer, so not really a big shock. Markets are contracting right now. Whatever. Markets are contracting. We'll see which way it wants to go. If it's gonna trap some people getting long and dump short, or if it'll trap some people getting short and then pump long. These being long bias markets, I would expect potentially the trap short, even as far low as these equal lows, to possibly grab people and go long. But it could go the other way too. And then really maybe once you got a deeper low, you know, potentially find the deeper cut and then start to recover from there. So, but we'll just have to wait and see what happens. It's all about just controlling risk, taking it day by day, you know. Keep everything in our favor. If the market wants to run in our favor, then we just trail it up. And if it's going to run against us, we stop it out. I mean, it's that. Trading's that simple. So, yeah. Let me know what you guys think in the comments about these kind of introspective videos where I get into more of the granularity of how I see the markets and what I'm looking for in terms of just my whole psychological approach to how I'm going to structure a trade, what I'm going to risk to keep my own psychology in check, and when I'm just going to decide that the market's really not tradable. The more that we contract, the less I want to trade this market. So we'll have to see. I'll have to see what it does. And I do check the news. Tomorrow we got what do we got tomorrow? Oh, we got Fed chair speaking at the New York Open. So yeah. So we'll want to see what's going on tomorrow for sure, and then they'll have some job openings report, which I don't think that's a big deal. Fed chair is going to be a bigger deal. That's probably going to be a lot of whipsaw though. Honestly, when I study my own data, call it like last week plus, you know, add in today or whatever, you start looking at time of day.